TARP's Congressional Oversight Panel released its monthly report overnight. This one focusing on the $4.3 trillion in assets guaranteed by the Treasury. Joining us right now from Capitol Hill is the chair of the Congressional Oversight Panel, Professor Elizabeth Warren. Professor Warren, thanks so much for coming on Bloomberg again. I'm going to get right to it. You're a taxpayer, I'm a taxpayer, everyone's a taxpayer. TARP program, will it make a profit and when?
Well, let's just take this little segment of the TARP program, and that is on the guarantee program. If everything stays on track, it looks like we're probably going to turn a profit on it. We're going to make some money out of this one.
All right, that's a good thing. I'm glad to hear that. Tell me how much money and when do you think we'll see that profit?
Well, we don't know for sure how much money, although I should say the fees that we got on the guarantees, the real point is we put a lot of guarantees out there and we haven't had to pay off on them. We may end up having to pay something on the city guarantees, but even so, we're likely to make a profit based on, at least so far, based on the fees that we've been able to collect. The real impact of this report is to say, I think, three things. Good news on that part, but also to remind us there was some real risk that the American taxpayer took over the last year. This is saying the risk paid off, but lots of risk. And the import of this report is the going forward. We have now fundamentally changed the world because we now live in a world in which many, many investors believe and many companies operate as if the chosen ones are going to have guarantees backing them up.
And Professor Warren,
that changes things.
We want to dig deeper into that, but I'm going to push it a little bit because I really do want to get an idea. I think we all want to get an idea of when we see a profit here.
What we're seeing now, on this part of the program, just on the guarantees part, we're being paid fees. We got fees from Bank of America. We got fees on all of the money market program. Remember, we went in and guaranteed over $3 trillion in money market funds. We've gotten the guarantees and closed that program. So we've actually made our profits on that. They're just, you know, relative to a $700 billion program, we're talking, you know, $1 billion here and $1 billion there. I know that once upon a time that sounded like a lot of money, but we've put a lot in here, too.
Professor, I'm going to give you a question that will be very difficult to answer. Just following up on what you had to say about guarantees, what would have been the costs had we had to nationalize Goldman, Morgan Stanley, et cetera, et cetera?
Yeah, how high is up? You know, the numbers would have been extraordinary. Now, this was a case of the government moved in, and I just want you to notice it on the numbers. We really went way beyond what TARP was. It was the part of the statute that said we can do guarantees. They went way beyond the numbers in TARP. They made a gamble, and look, the truth is it paid off. It was a lot of risk, but I think the people who were making the decision felt like the alternatives on the table were not good alternatives.
Hey, Professor, you may just have brought us the best news of the week, if not the month or year, and that is that TARP will actually make money, and well done if so. But one question, at least we were talking with an analyst earlier about Fannie Mae and whether they can afford the interest payments on some of that money. Are there other companies where that might be an issue?
Yeah, well, you know, it's the place that we have the biggest outstanding guarantee right now is Citi. And with Citi Financial, we guaranteed about $300 billion of their assets. And let's face it, you know, they're a real mix of assets. Indeed, one of the points we call out in this report is we want more transparency on what's in the taxpayers' collateral in those guarantees. What is it exactly that's in there and how do we value it? So that's probably, at this point, the single biggest risk in the guarantee program. The rest of it seems to be, you know, the guarantees we made between the banks, those have expiration dates out to 2012, but those are looking really good right now, you know, based on current conditions. And as I said, the money market one has gone away. We're ready to dial back on the FDIC increases in guarantees. So,
Professor Warren,
so pretty good on the program.
I can't let you go without asking you. You got 5 seconds. Barney Frank has mentioned he'd like to see you head the proposed Consumer Financial Protection Agency. 5 seconds. Would you consider it?
I got classes to teach.
All right. We'll have to follow up with this one. All right. Professor Warren, thank you so much.